Hi, how are you students? Today we are going to see what is the intangible assets. IAS 38, right? Accounting standard, international accounting standard, intangible assets IAS 38. That is LKAS 38, right? The intangible assets are the assets, those are non-monetary items, items, and they are not physically, they are not existing. Physical existence is not there, right? It is not monetary asset, and it is physically not existing, right? Example: patents, trademark, and license. Patents, trademark, and license. Okay, so non-monetary assets with no physical substance means patents, brand names, license. Okay, these, for to identify the intangible assets, there are three factors that we have to taken into the consideration. One is identification, identifiability, right? You must be able to identify easily. And second one is control. control Control, you must have the control on that particular intangible asset, right? If control and identity is there, you can sell separately, you can sell it separately. And recognition is should be there. That is the framework, right? Recognition is the framework, right? So separate acquisition, identifiability means easily you should be able to identify, and control, you must have the ownership. If you have the control, you must have the owner. If you have the ownership, is control is with there, right? Separate acquisition, that is separately acquisition. Capitalize the, if you buy, if you purchase a patent separately, right? That means, I know, if you separate acquisition in the sense purchases. Capitalize the, capitalize at cost plus any directly attributable cost, right? You can capitalize the, if you acquire, you can capitalize the direct cost attributable to the intangible assets, and amortize it is amortization is charged over the useful life of the asset, right? You can amortize the asset taking into the consideration of its useful throughout the useful life of that, right? Research and expenses, the second one is research. Capitalization cost in the sense, you can capitalize the purchase cost and any other non-refundable taxes, etc., right? And if you say directly attributable cost in the sense license and legal fees, etc., it is known as directly attributable cost. Okay, research and expenses, normally it all whole research expenses has to be charged into the statement of profit and loss account, right? Whole research expenses has to be charged into the profit and loss account, right? Development expenses must be capitalized if following are satisfied, right? The development expenses, you can capitalize the development expenses if you are satisfied with the following. What that is, sell or use. You should use or sell, right? You must have an active market, right? Active market. And commercially viable, it is commercially viable, you can sell it commercially, it should be available, right? And technically feasibly, it should be technically feasible, right? Technically feasible, you know, no, technically feasible. Resources to complete, resource to complete, right? Measure cost reliably, you must be able to measure the cost reliably. probable future economic benefits. Future economic benefits, you can derive future economic benefits, right? And internally generated non-current assets, internally non generated intangible assets cannot be capitalized. Okay, internally generated capital cost cannot be capitalized. Okay, so we will directly go into the questions. By doing the questions you can understand the intangible assets, how to do the treatments for the intangible assets. There are so many angles we can see from, right? So we'll go for the first question. Question number one. Question number one, this is, which of the following statements are correct? One is, capitalized development expenditure must be amortized over a period not exceeding 5 years. That is wrong, no? That is wrong. That is not so. Right? Second statement is, capitalized development costs are shown in the statement of financial position under the heading of non-current assets. That is correct. The capitalized development costs are shown in the statement of financial position under the heading of the non-current assets. Okay, yes, non-current assets, intangible assets, right? And third statement, that is second statement, is correct. And third statement is, if certain criteria are met, research expenditure must be recognized as an intangible asset. Completely wrong. So it has A1 is the only, A1 is the correct. A, right? A1 is the correct. A, it says second, capitalized development costs are shown in the statement of financial position under the heading of non-current assets. Okay, that is the correct one. So we will go for the question number two. Right, question number two. Question number two. Example. Right. Example. Booker is involved in developing a new products and has spent 15 million on acquiring a patent to aid this development. Right, 15 million. They have spent 15 million by acquiring a patent to aid this development. The initial investigative phase of the project cost an additional 6 million, whereby it was determined that future feasibility of the product was guaranteed. Right? That is research and development. 6 million. Right? And subsequent expenditure incurred on the product was 8 million. That is, of which 5 million was spent on the functioning prototype and the remainder on getting the product into the safe and saleable condition. Prototype is the asset and balance 3 is the intangible assets, that is patent, right? A further 1 million was spent on marketing. You had to charge it to the P&L, and 0.5 million on training sales staff on how to demonstrate the use of the product, right? That is also P&L, right? So we'll see, explain how Booker should account for the expenditure in the financial statement. Financial statement, that is statement of financial position, right? Statement of financial position and statement of profit and loss account. right? Statement of profit and loss account. In the statement of if you say in the broker, okay, broker involved in developing new products and has spent 50 million on acquiring a patent to aid in this development. Purchase of a patent, right? That is non-current asset. Non-current assets. Assets. Under the non-current assets, you will say intangible asset. Intangible assets, right? Intangible assets. Intangible assets, you can say 15 million. 15 million. 15 million. Okay. 15 million. It is on thousands, right? It is in the thousands. 15 million. Okay. On acquiring the patent, Aiden. The initial investigative phase of the period cost an additional 6 million. That is research. That is research expenses. Research expenses recognized as an expense, right? Research expenses. Research expenses, right? Research expenses. You will say how much they have said. Research expenses 6 million, right? 6 million is the research expenses. 6 million. Okay. 6 million. And so and whereby it was determined that the future feasibility of the product was guaranteed. Subsequent expenditure incurred on the product was 8 million, out of which 5 million was spent on the functioning of prototype and balance 3 million remainder on getting the product into safe and saleable condition. Prototype, right? Prototype is a current non-current assets. Okay. Prototype, right? That is 3 million you have to add with this, and prototype, that is non-current what is property, plant and equipment. Under property, plant equipment, you will say how much. 5 million. 5 million, right? Property, this is 3 million, right? Both together 8 million, right? So right, 8 million and feasibility and 5 million was spent and getting the product safer. Further, 1 million was spent on marketing and 0.5 million on training sales, right? 5 million marketing expenses. Expenses and how much marketing expenses? 1 million. 1 million and 4.5 is training expenses. Expenses is 500, right? Here with this we will say 18 million. 18 million. Okay, this is the way it will show in the statement of financial position and statement of the profit and loss account, right? 15 million has to be capitalized, 6 million has to be PNL, 3 million capitalized and 5 million to property, plant and equipment. Okay, that is the way of presentation. And third question, right? We will go to this third question. I will raise it this, right? Question number 3. Question number 3. Right? Question number 3. GSK is a large pharmaceutical business involved in the research and development of viable new drugs. It commenced initial investigation into the viability of new drug on 1st February 2015 at a cost of $40 million per month. February they are starting 1st of February, right? 1st of February starting, and on 1st of August the development of viable drug commenced initial investigation, that is research and development viability of a new drug on 1st of February, 40,000 per month. On 1st August 2015, GSK were able to demonstrate a commercial viability of the new drug and intend to sell it on the open market once fully completed, but still not fully completed. Okay, so costs subsequent to 1st August 2015 remained 40,000 per month. At 31st December 2015, GSK reporting date, the drugs was not yet complete, but it is believed that by mid 2016 the drugs will be available for sale. So it is not still available, right? The finance director is confident of the success of the drug sales that he wishes to revalue the intangible at the reporting rate, right, using a discounted future cash flow model to establish the fair value, right. Explain the treatment of the above costs in GSK's financial statements for the year ended 31st December 2015. Here they said GSK is a large pharmaceutical businesses involved in the research and development of viable drugs. It commenced initial investigation into the viability of a new drug on 1st February, cost of 40,000 per month. On 1st August 2015, GSK was able to demonstrate the commercial viability. So before 1st of August, there is no commercial viability. Therefore, we could not capitalize the 40,000. We have to before August 1st, August 1st, after on the 1st of August only, the company feels that it's find out that commercial viability of the for the patent, right? So before the 1st of August it is not, commercial viability is not there, so we have to assume that expenses incurred before 1st of August is research and development, right? Research and development, then research 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 expenses 40,000 into, right, February, March, April, May, June, July, right? July, 6 months, 6 into 6 months, right? 6 into 0 0 0 and 0 24, 240,000, 240,000 balance from 1st August to 31st of December. You can capitalize it, right? You can capitalize it, right? You can say intangible asset, as a intangible asset, that is 40,000 into how many months? August, September, October, November, December. 5 months. Right? 5 months. Fine. That is 200,000. 200,000. Right? This is what it is recognized in the statement of financial position. Intangible assets 200,000 and sale statement of profit and loss account we show 240,000 as a research expenses. Right? This is development expenses 200. We are showing under the intangible assets. Okay, that is the question number 3. Okay, and question number 3 and question number 4. Okay, question number 4. Question number 4, this is Beta bought a new brand name on 1st July 2010, right, for $20 million. The estimated useful life of the brand new name was 10 years. Estimated new lifetime is 10 years. That means amount brand 20 million, no? 20 million. Brand. They have developed a brand for bought a brand of 20 million, right? And expected lifetime is how much the expected useful life is 10 years. 10 years. Then amortization expenses. Amortization per annum was 2 million. 2 million, right? 2 million. Okay, 2 million. Okay, per annum. So a brand specialist brand for 10 years. Brand specialist valued the brand at fair value of 22 million, right? One brand specialist valued the brand as a 22 million. Training course was was also run by him on 1st July 2022 for all the staff to train them on how to use a new accounting software. This training cost 500,000. So expects the employees to remain with them for an average period of 4 years. Calculate the total amount to be recognized as an expense in the statement of profit and loss account for the year ended 30th June 2023. Right? Here, they bought a new brand name 1st July 2010, 20 million. The estimated useful life of the brand name was 10 years. A brand specialist valued the brand at a fair value of 22 million on 1st July 22 after 2 years. After 2 years. Right? Training course was then there is no active market. Here there is no active market. Right? This cannot be amortization we can take, right? We cannot capitalize, no active market, right? So 2 million is there, 2 million SP and L. You can take 2 million and amortization and training you will get 0.5 million. Then altogether 2.5 million you will show in the statement of profit and loss account. This was trade. There is no active market and there is no control. This is identifiability and control. Control also not there, right? And what you called uh, active market, right? Commercial viable is not mentioned here, right? So that is not there. So we will show 2.5 million in the statement of profit and loss account in 2000 and December 31st December 20 2015, no, 2013, 20, sorry, 2023. Okay. Okay, so that is what. Okay, so I hope that you would have got a good picture on these lectures, and I hope to find out this one. So if you go through again, what is the pattern, what is the control factors to be considered, that is important factors to be considered when you are assessing the intangible assets. That is, identifiability should be there, right? Control should be there. In this question, control is not there, right? And the market conformity also not there, right? Viable market activity is not there, active market is not there, right? So development, so identifiability, control, recognition, all three should be there, or identifiability and control is should be there, right? If one of this is not there, you cannot capitalize it, right? Separate acquisition, capitalize the cost plus any directly activity cost, that has to be the research and research expenses, you have to charge it to the P&L. Then development expenses you can capitalize if the following is satisfied, that is sell or use, commercially viable, technically feasibility, resources to complete, measure the cost reliably, probable future economic benefits should be there. So, right, if you have this in your mind, then you will be able to tackle these questions which are coming on the intangible assets. Okay, you have to practice more questions and questions. Okay, so I am going to wind up this lectures today and hope to meet you in next lectures. Okay, thank you.